Joining us now to answer that question is David Selig, a federal tax practitioner with Selig & Associates in New York City. Also with us, Morgan Thompson here on the anchor desk. David, Morgan, it's great to have you both with us. David, let's start with you here.
Thanks for having me.
Let's start with you.
Sure.
And I want to talk a little bit about this issue here. The president's comments, not necessarily the case, is it?
No, it's absolutely false. Right now, there has been a very big buildup at the Internal Revenue Service to issue taxpayer identification numbers, largely to illegal immigrants. Now, these individuals are going to be able to file tax returns this year, and because of Section 152 of the Internal Revenue Code, they can deduct dependents that have never even stepped foot in the United States. In other words, they can deduct dependents that live in Mexico. Each one of those dependents gives them an exemption of $3,950. But what's so insidious about it, it allows these individuals to collect, claim, and receive the earned income credit, which is a refundable credit. It means you get back more than you pay into the system, considerably more in this case. Average claimant will be receiving approximately $6,400 courtesy of the federal government.
Now, David,
and
how
that
is this
just
possible?
is not
How
right.
can you receive credits for more than you even paid in? And how can you get credits for people that don't even live in this country?
That's a great question, and I'll give you a very simple answer. What we did is we created what's called a refundable credit. It is a euphemism for welfare or public assistance. People receive something, redistribution of wealth, if you will. Now, Section 152 of the Internal Revenue Code allows people to deduct dependents in the two contiguous nations, Mexico and Canada. The rules in Canada are very stringent. Just like if you tried to claim a dependent here, you would have to prove that dependent actually exists. Whereas claiming a Mexican dependent, it's fast and loose. You're on your honor system. And the reason why is they say they don't have the structure that we have here. Many births are actually recorded in a church registry, and there's a lot of rural areas, so we're giving these people a pass.
And David, you say, and you also say that the tax practitioners in a lot of these communities where a lot of illegal immigrants live, they know about this loophole, specifically dealing with Mexico. So they have folks coming in, claiming up to 5 dependents who they may or may not have talked to in years, and getting a lot of money back from the federal government. How much money are we talking about one illegal immigrant can possibly receive in their tax refund check?
Well, on average, they're looking at $6,400 strictly from the federal government. However, many states have matching or partially matching fees. So it's not uncommon for an individual who just makes up these dependents to get back $11,000, $12,000 courtesy of the American taxpayer. And as for these practitioners knowing about it, they certainly do. You will see, and your viewing audience will notice, there are an awful lot of tax return preparation offices in areas with high illegal immigrant populations. It's a cottage industry. Come April 15th, this chicanery that the president is pushing on us is going to cost the American taxpayer an additional $18 billion.
That is a staggering number.
Yes, sir.
David, we'll be back. We got another segment. We're going to talk about this also and about tax benefits and Obamacare that illegal immigrants might be receiving. We'll be right back.